I'm CA Akshata Udupa. Welcome you all to my session on swing trade. This is a most requested session, and this helps a lot of people who cannot actively sit and monitor the stock market. Even though you don't have that much time to sit and monitor the chart from morning till the close of the day, you can do trading using this swing trading technique. This also helps the people who are going for the jobs or who are busy with something else throughout the day. First, let's begin with knowing what is a swing actually. If you see here, movement like this or like this is called as a swing. Okay, maybe just upward movement and then downward movement, or downward movement and then an upward movement. These type of exactly these type of movements are called swings. So this term swing is very much important when you read the chart, because it plays a major role in taking trades, and many strategies are dependent upon the movement of this stock market. So swings are nothing but, you can say, a language of stock market which helps you in reading the charts. So if a stock say starts its movement from here, then if it moves like this upwards, then it will definitely come down. Now it may not reach this position, but it will definitely come down to some extent, and then again will start going up. Now this can happen in a day, in a month, don't know, it might take any number of days, that is any number of time. But once a stock which goes up has to come down, or taking the reverse case, once if the stock comes down, it has to go up. Okay, now the level at which it travels can be different, but the swing, any stock will definitely make a swing. So the whole chart trading will consist of different swings of different type. So it is very important to know what is a swing, what is this term all about. Now, what is swing trade? Trading in short time frames, that may be weekly or monthly, which will capture the upswings and downswings in stock prices. Trading by taking advantage of this upswings and downswings is nothing but swing trade. Now this swing trade is totally based upon technical analysis. It is not a fundamental analysis wherein we check different financials of the companies. This is purely based upon technical analysis, that is reading of charts. Now, when do we trade using this swing trading technique? We trade in trending stocks, okay, because if you take a stock which is not showing a good momentum, then you will not find good swings and you will not be able to take a good entry point. So while selecting the stock, it is always better to select the trending stocks. You avoid range bound stocks, because range bound stocks will not give you that great results. When we talk about swing trade, more than trading it, more than intraday, we go for taking for long term. Long term doesn't mean for years. It will be for a week or for a month, or maybe 2 to 3 months. Now if you want to invest for a very long term, then it's always better to go for fundamental analysis. If you want to go for day trading, then it is better to follow different other intraday strategies. Now if you want to hold for a short period of time, but again more than a day, then you can go for swing trading. So go long at the lowest possible price and go short at a highest possible price. That is, when you want to buy, you have to try to get the price which is lowest possible. Similarly, if you want to short, that is sell, then you have to look for a price which is highest, which will give you more profits. In this case, you can see stock is continuously showing a downward movement, right? Then after some point, it became range bound. That is, it is in between these area only. The square you can see, no? Inside the square only the stock is moving, right? Then after that, there is one breakout which crossed this particular area, and after that again the stock started moving in the upward direction. Now what does this mean, or why is this happening? You can see initially the stock was moving in the downward direction, and when it reached some point, that is some point wherein the stock price was low, many big traders, you can say, okay, who are having a lot of funds, huge funds, stepped in and they started buying the stocks. Now if they buy the stocks, will they buy, say there is a person or there is a trader who wants to invest, say 30 lakhs. Okay, 30 lakhs is not a very small amount. You can call him as a trader with huge capital. He is not a retail trader. He doesn't come under the ambit of a retail trader. Now he want to invest 30 lakhs. So if he invest all complete 30 lakhs in one go, then what happens? Immediately you can find a big spike over here, right? And the market will start moving upwards. So what happens? He will not be able to get the stock at the price at which he wanted to buy. So what he will do? He will break this 30 lakhs into say 1 lakh. Okay, so he will buy 1 lakh here, he will wait for a day or so, again he'll buy 1 lakh, again he will buy 1 lakh. So here he'll be keeping on buying, which will not allow the market either to go up or to move down. So he will keep on buying until that 30 lakhs is exhausted. Once 30 lakhs is exhausted, you can see the stock will come out of this range bound area. So once it comes out of this range bound area, you can see a big spike over here, right? Because this is where the retailers come in. So in the trendy market, after it comes to a range bound area, if you find a big spike which makes the stock to come out of this range bound area, then it can be a signal of the trend change, or it can be a signal of coming out of the range bound zone. So here if you observe, the stock was coming downwards, right? It was showing a downward movement, and here you can find a huge volume, right? This candle particularly, the candle size is small, but you can see a volume is very big, huge spike. Now what if you are a beginner, what you will do? You will see, oh, there is a very good volume over here, and you will just short it here, but thinking that since there is a good volume, the stock will come down. But that doesn't happen. When you find such huge volume which is abnormal, you can see here the volume is almost the same, but here this is abnormally high, right? This candle, that means there is a trend reversal, or the stock is going for range bound zone. So you can see after this candle with large volume, stock became range bound. Again after some time, now this range bound time we cannot predict. It can be a week, it can be a month. After this range bound time, there is another candle which is again come up with a very good volume. Now this can be an indication that the stock will move in the upward direction. You can see here, this is a green candle which is again big with very good volume. So here you can apply your strategy and take the long position. So since this is a swing trade, we have to keep the time frame at day. Whenever you analyze the chart, always analyze with day chart, okay, 1 day. So this green candle will give you buying opportunity. So where can you enter? The entry will be above this candle, and the stop loss will be low of this candle. Again you can go on trailing the stop loss. I will tell you how to trail the stop loss in the next part of this session. Now in this case, if you see another example, the stock was moving downwards continuously, and then it became range bound here with a very good spike over here. It became range bound, and you can see this candle again with a very good volume broke this range bound area, right? So what has happened is, once the stock fell and here buyers came in and they started accumulating the stock by buying small quantity for a longer term. Then once buying is done, retailers come in and take the control. So here you can see they took it again upwards. This candle itself is an indication that the stock is going to be bullish now. So again after a rally, you can see here it became range bound, right? Now what does this mean? You may think that here they have purchased, right? The people with a large capital, say like FIIs, have bought over here, and here what they are doing, they are booking their profits, because the stock has made a very good rally and they started booking profits, right? So what you think, once it comes out of this range bound zone, you think that the stock will fall, but necessarily that need not happen. Because sometimes what happens is, few people have entered here, big players, and after again a small rally, here again some big players have come in and they started investing. That is why when the stock came out of this range bound area, it again started moving in the upward direction, which is a signal. You can see here a very good spike in the volume, right? A very huge volume, which is again an indication that, again a green candle, so an indication that the stock will move in the upward direction. It again started moving upwards. So it's not necessary that after range bound stage, if the stock makes a rally and again come to the second range bound stage, then it is not necessary that the stock has to fall. It can again go upwards, because again this can be a profit booking case, or this can also be a new big players coming in the market. Similarly, in this case, if you see, the stock moved in the upward direction and here it became range bound, right? Here becoming range bound in the sense, maybe people started booking profits, or maybe new big players came in and started investing. The case can be any of those. But when you will get the confirmation whether this is profit booking or new big players coming in, by looking at this candle, which is a really big candle, red candle with a good volume, which means this was profit booking and now the stock started falling down. So this will be the candle which will give you confirmation of the stock becoming bearish. So your entry will be below this candle and stop loss will be above this candle. Now shorting is not possible in cash. You can do it only in futures, but you require a lot of fund in futures. So what you can do is you can go for options, wherein you can buy put. Okay, so if you want to know more about options, you have another video to check out, that is basics of options. There I have explained everything clearly, so you can check it out. Now first let's check out, is it possible to trade when the stock is in its range bound area? Okay, so if you check out my another video on price action, there I have given a pattern which is called channel pattern, right? Now channel pattern is mostly available when the stock is in its range bound zone. What you can do is, you can just check out the stock which is in the range bound zone and you can check if channel pattern is formed. If these type of pattern is formed, then you can take a trade at this support levels. That is, see, this is 1, okay, first point, 1, 2, 3, 4, 5. You have to wait until the stock reaches this 5th point. That means you will have 3 touches over here and this point can be your entry point. Okay, so you will enter here this candle, above this candle. You will not see whether this is a green candle or red candle, because you have 3 touches. You are predicting that the stock will again make the same move, that is 5 to 6, 6 to 7. This will be your trading area. Okay, so once the stock touches this 5th point, you will directly buy at the above this candle and keep this as your target. You are just assuming that the stock will definitely go till here, that is this resistance, or if you are shorting, then you are just assuming that the stock will touch this support level. So once the candle touches this level, without seeing what type of candle, you are just going for buying and keeping this as your target. Stop loss will be this candle low. Next, the strategy which I am going to share is a strategy using monthly CPR. So in the previous strategy which we discussed, we were taking the trade at the initial stage itself, that is as soon as the movement starts. If the stock is moving downwards, then as soon as it becomes range bound, we look for the trading opportunity. Now from range bound zone, if the stock is moving upwards, then as soon as the stock starts moving in the upward direction, we check for the trading opportunity. But here by using this monthly CPR, we obtain additional confirmation, and once we obtain this confirmation, we are looking for the trading opportunity. That is, we are trading a little later but with additional confirmation. So compared to the previous strategies whatever we discussed, this strategy is more safer, I can say. So if you are a person who cannot monitor for the whole day or cannot monitor frequently, this strategy will give you additional confirmation and this is safer, I can say. And this strategy, using this strategy, you can hold for more than a month also, depending upon the opportunity that you get. You can hold it for a long term, that is more than a month, for 2 months, 3 months, or maybe more than that. So basically this strategy is dependent upon monthly CPR. Now before going to see how to apply this strategy, let's first understand what is a CPR. CPR is nothing but central pivot range, and pivot point is a point from where things take a U-turn. So in this case, in this stock analysis, this pivot point will give us a point from where the stock might take a different move. That is, if it is moving in the downward direction, it may take upward direction after that. CPR will give you CPP, that is central pivot point, and a range between this central pivot point. Now central pivot point is calculated by adding previous day high, previous day low, previous day close divided by 3. That is, the average of previous day high, previous low and previous day close will give you central pivot point. And this indicator will give you a range, that is upper range and lower range between this central pivot point. Now by using this particular indicator, we can clearly analyze which can be the entry point with the proper confirmation. Now if you are looking for a long position, that is buying opportunity, which I suggest is good to go for rather than shorting, current month CPR should be above previous month CPR. The first thing which you have to check is the current month's CPR. Here again, make a point that we are using monthly CPR. So the current month CPR should be above the previous month CPR. Then minimum 2 consecutive higher CPR should be there. Your entry will be on retracements. Then stop loss should be below monthly CPR. Now stop loss can be below the monthly CPR, or the stop loss can be below the monthly CPP, that is central pivot point also. Now clearly we will see this using the chart. I am using this TradingView portal. You can open an account free of cost in this portal. The indicator that I am using is CPR. So this CPR of many CPRs are available. You can choose any of them. What you have to do is just click here and type CPR. There are lots of CPRs over here. I use CPR by KGS. So once you select this, these lot of things will come over here. You have to go to settings here, and in inputs you have to uncheck all this. By default everything will be checked over here. You have to uncheck all of this and keep only show monthly pivots. Okay, only check this monthly pivots. All of them you have to deselect, and then go to styles over here, and here you have to uncheck this monthly R1, monthly R2, monthly R3, monthly S1, monthly S2, monthly S3, and then click OK. So only these things we need in order to analyze. And for all this analysis we are using this day chart. Okay, time frame you have to keep it at 1 day. See, this is a very good example. You can see here these are the CPRs, these are monthly CPRs, and I have kept the candle at day time frame. So the first thing which you have to see is, if you are considered trading in any month, you have to see that the CPR of that month is above the CPR of the previous month. So here you can see this CPR is above this CPR, right? So this can be your entry point. The second condition which is required to be met is at least 2 consecutive low CPRs should be there. That is 1 and 2. Right? So you have continuous 2 CPRs which are below, which are coming lower. That is, this CPR is lower than this, and this CPR is lower than this CPR. So you can make an entry at this CPR. Where will be your entry point now? You can see here these red candles are formed, and this green candle which formed again is the volume is not that good. So you have to wait for the good volume. You can see this candle gave a very good breakout. Also there is a very good volume in this candle. So you can go for buying above this candle, okay, above this candle high, or you can also go for another method wherein you can see here the stock came till here, right, the CPP, that is a central pivot point. It just took support over here and then moved upwards. So this green candle can be your entry point and the stop loss can be below this CPR. Around here you can keep the stop loss. So entry when the candle touches this CPP and takes support, and stop loss can be below this CPR. Now if you miss this opportunity, then you can again look for the next opportunity, that is in the next month. It's always better to take the trade initially itself, that is beginning of the month. If you get the opportunity, then it's always better to take at the beginning of the month. Here if you see there is a green candle coming in, right, this is again above this pivot, right. So this can be your entry, that is above this candle is your entry and below this CPR is your stop loss. Now again, while setting your stop loss, check the length of the candle. If the candle is too big, then it's better to keep the stop loss just below the CPP, that is central pivot point. Now that is again left to you. You can either keep the stop loss below the central pivot point or you can keep it below the CPR. Now where will you keep depends upon the RR ratio or this type of the candle. Now you can see that the stock rallied over here, right. Now you can go on trailing the stop loss. Next, let's see what are the rules for taking short position. The first thing is current month CPR should be below previous month CPR. When we are looking for long position, current month CPR should be above the previous month CPR. Here for short position, current month CPR should be below the previous month CPR and minimum 2 consecutive lower CPRs should be there. Entry will be on retracement, stop loss above the monthly CPR or just above the monthly CPP depending upon the situation. Now let's check it out practically. Here you can see this is a clear downtrend, right. You can see this CPR is below the CPR. So we have 2 consecutive low CPRs and this will be the month in which we will make the entry. It's always preferable to see for the opportunity in the beginning of the month itself. So you can see here you got entry, right. Just below the low of this red candle will be the entry and the stop loss will be just above the CPP or above this central pivot range. It moved downward for a long time and then again it became range bound. So you have an opportunity of making money till here, right. Here if you check, you can see you have 2 consecutive high CPRs, right, and this third CPR is also above this previous CPR. So here you have to see for the opportunity. Here if you check at the beginning of the month itself, the stock is somewhere here, right, it is above. It has already moved actually away from the CPR. So if you take the trade here, your stop loss will be somewhere below this CPP or below this CPR, right. So this gap is too much. The stop loss points which you'll have to keep is too much. So it is always better to avoid such stocks because you can see the movement is aggressive and if you lose, you will lose a lot of points, right. In this case only if you observe, in next 2 days the stock just came near your stop loss. Actually if you keep the CPP as a stop loss, then the stop loss is hit in this case. So it is always better to avoid such stocks. You have to manually check for the good opportunity because you have around 2000 stocks available in the NSE. So it is not a big deal to put CPR indicator and check it out. So it is always better to check for the good stock which will give you more confirmation, and aggressive movement is also not to be entertained because the chances of losing is more in such cases. Let's check out this example. Here you can see consecutive 2 high CPRs and this CPR is above this CPR. So here you can look for buying opportunity. If you see here, the first candle of the month itself broke this CPR. The another thing which you can note here is the CPR is very narrow. So you can enter above this candle high, and the stop loss can be below this candle low, because if you keep the stop loss very near, that is below this CPR, then the chances of getting hit is more because you don't have much difference over here. The CPR is very narrow, so it is better to keep the stop loss below this previous candle low. So your entry will be above this candle and stop loss will be below the low of this candle. Here if you see, the stock moved in the upward direction for another 2 months, and then it became range bound for again a very short period of time, that is around 1.5 months, and then again did the rally. So the homework that I am giving to you is you have to analyze at least 50 stocks continuously before taking the trade. You have to analyze, you have to put the CPR indicator and analyze for the good trading opportunity. You have to see where can be the entry, where is the stop loss and everything, and any confusion in that particular stock, just avoid that stock, because you have a lot of stocks that are available, and analyzing using the CPR is not a very big work. You can easily do it with the help of this particular indicator. So please analyze as much as stock as possible and then take the trade. Next, the last thing which I am going to discuss over here is how to trail the stop loss. Okay, there are two types how you can trail it. One is trail every previous candle low, that is you have to keep the time frame at day candle and you have to trail every previous candle low. The second option which is available is you can trail every previous swing low. Okay, now let's check it out. How is it? So see, this is a chart for you to show how to trail the previous candle low. If this is the entry point, this candle is your entry, then your entry will be above this candle high, stop loss will be below the candle low, right? So the next day, once the next day candle closes, you will trail the stop loss from here to here. That is, your stop loss will be this candle low, that is the next day candle low. Okay, again, once this third day gets completed, you will trail the stop loss to this low. Similarly, you will go on trailing every day, and you can see here the candle breaks the previous day low, right? Your stop loss will be here and this candle will break this candle. Now stop loss trailing need not be technically you are placing that stop loss in the portal. You can just check it manually. Instead of placing the stop loss, you can manually check and exit, because if you place the stop loss, even if the candle doesn't close, if just the wick comes below this stop loss which you have set, then you will exit the position. So it is better not to place the stop loss in the portal. You can manually check and exit. Here you can see this candle closed below the low of the previous candle, so this will be your exit. Now even though the wick crosses your stop loss level, that is not the exit point for you. Even though the wick crosses the close of this particular candle, here you can see the close of this candle is above the previous day's low, so this is not the exit point. Only when the candle closes below the low of the previous day candle, that will be your exit position. So in this case, you will make you will collect the points from here till here. This will be your profit area. Let's see the another case, that is a second case wherein you will trail the stop loss using previous swing low. Now how is this done? If the entry candle is this one in this particular example, your stop loss will be initially based on the CPR. If you see, you will keep a stop loss below the CPR right here. Okay, so once this stock completes this one swing and starts moving upwards, you will trail the stop loss from here to this swing low. Okay, just below this swing low. Again, when the stock completes this swing and starts moving upward, you will trail the stop loss from here to the next swing low. That is again keeping a small buffer. So you will continue trailing it like this, and in this case you can see this will be your exit point, because here again you trail the stop loss to here, this swing low, then the stock moved upwards and it came down here. This swing low is broken, right? So this will be your exit point. So what happens is, in the previous case you will exit very early, but when you trail the swing lows, you have a chance to ride this entire trend. So this is how you have to trail the stop loss. This is again a technique which again gives you a lot of profit taking opportunities. Hope this was helpful. Please do a lot of analysis. Please take 50 or more stocks and analyze first, and try to capture the entry and trailing of stop loss technique, and then only enter into a trade. I wish all the viewers all the best and happy trading.